Theoretical framework. Let's start with, in this particular content, you have to understand the concept as well as capital and revenue receipts and payment. Concepts, conventions, assumptions. Very often we can expect the illustrations or some theory questions or MCQ questions from this content. Most of the cases, this particular component from this topic you can get around 4 to 6 marks also. Okay, small topic, you can finish up learning just like that, and the ensured results will be there, and you will get required aggregate mark also, right? Transactions and event. You have to understand the difference between transaction and event. In transaction is nothing but the action between the two parties or an act as per the agreement, like purchases, sales, rent. Event is nothing but the result or consequences of the transaction, like profit or loss due to the operations and the closing stock. All these things are event. Usually we pass journal entry for the transactions. For the event, we pass the journal entries as an adjustment type. Adjustment type. Hope you will be now able to understand how to pass a journal entry for the closing stock. Usually closing stock will be adjusted with the purchases, or it may be posted in the credit side of the trading account. The general process what we do in our study is posting that in the credit side of the trading account or closing stock to trading account. The other way it can be adjusted with the purchases. In that case, closing stock for debit to purchases. Here we cannot apply the normal double entry rules like debit what comes in, credit what goes out. It's only adjustment, right? Hope now you'll be able to understand the difference between transaction and event. And accounting is an art, right? That's how it is defined. So we have two blocks here. One is general financial information, another one is using the financial information we can make some decisions. General financial information will fall up to the final accounts. Okay. And after the preparation of the final accounts, the management will decide whether the company is performing good or not, will be the second block. That is what about usage of financial information. Recording, classifying, summarizing. Three components are there in preparing the final accounts. Recording is nothing but posting the journal entries, means transaction in the journal entries or subsidiary books. That too, it's measurable in the form of money. Later on, classifying, all the transactions are posted in the chronological order. Thereafter, year end, we need to know what is the total amount we spent for the rent and electricity and all, one after one. That will fall under ledger. That will fall under ledger. We are grouping. How much rent paid for the entire year will be grouped. Salary, purchases and salary. That classifying all these payments and receipts into the account format will fall under classifying ledger. And next one is summarizing, preparing a summary. The year end we prepare summary of receipts and payment, or income and expenditure and all the things put together in debit and credit form. That is called trial balance. From the trial balance we prepare the final accounts, which is called profit and loss and balance sheet. Even we need to prepare the cash flow statement. Sometimes there may be profit, but there may not be cash available in the hands. Sometimes there may be loss, but cash may be available. So net profit will not communicate to the equivalent to cash here. Cash is different format. So apart from the trading and P&L account and balance sheet, you're supposed to prepare the cash flow statements also in case you are preparing for a large company. At inter level, you study all these things in detail, cash flow statement. At foundation level, we'll confine with this one only. Later on, the trading and P&L account and balance sheet and cash flow statements are there, right? So based on that, we'll now decide whether the company is performing better or not. For that, we may use some tools like ratio analysis. Okay, what about the GP for your sales? If the GP being 100, for overall sales being 1000, then roughly 10% of your sales being the GP. That's how we can now represent all the numbers in terms of ratios. Ratios is a tool to find out whether the business is doing well or not. Hope now you'll be able to understand. So preparing the ratios, first part. Okay, 10% is the ratio analysis. As per the GPR, gross profit ratio, we get the GPR being 10%. What does it mean? In the last year, GP ratio being 8%, and for other companies it is only 7%, but our GP is 10%. What does it mean? Okay, we can earn better than the other companies. Okay, we are improving than the other earlier years. That's how we can interpret by comparing with the other companies' GPR or previous year's GPR. Okay, based on that, you can decide whether the company is improving or stagnated or weakening. All these things are can be identified. That is called interpreting the results. Interpreting the results, explaining the ratios. And then last one is communicating. You have to intimate this to the management, right? So if you are being the chief accounts officer, and the management is interested to know whether the company is performing better or not. So not reading all the lines between the lines of the trading and P&L account and balance sheet, because it's time consuming one. They want to know all the details in short. So it should be presented in a visual form like graphs and diagrams and etc. That will be the communicating mode. So this is what about the usage of financial information. Clear? And accountancy and accounting. Accounting is an art. Art is nothing but what? There may be some rules and regulations or steps. If you are repeating that again and again, you will be improving it. It's an art. Okay. So art is nothing but you are applying the same principles or rules again and again so that your skill will be improving. Such a way, accounts also, there are some principles. If you follow that and do it regularly, then your skill will be improving, right? So hope you will be now able to understand the art term. Art. Science is nothing but it's what about the recipe, like, okay, what happens to prepare the water, or what contains the water. H2O, like hydrogen and 2 times and oxygen. That's how we'll say. That's what about the science. So science gives the recipe, like a proven one, but to do it perfectly, you have to do repeatedly. That's called art. Okay, what science says to prepare a chapati or dosa. Okay, take a handful of flour and roll it soft and cook it properly in the tawa or whatever it may be. Right, that may be the science. But if you try, your chapati may be totally darkened or may not be perfectly cooked because you are not experienced. So the steps are there, which is called science, and perfect preparation is the practice. That practice comes under art. So accountancy is an art as well as a science too. Now, whenever we use the term accountancy, the accounting is called accountancy. Clear? Now, accounting cycle. Accounting cycle. Already we studied this accounting cycle. So you start with the transactions, okay, and post them into the journal entries or subsidiary books along with the journal proper. From there, you can post that to ledger and prepare the trial balance. Up to this part, you know, is called bookkeeping. After the trial balance, if you include the preparation of final accounts after passing the adjustment entry and closing transfer entries, then it will be called as accounting, completely accounting. Only to this extent is called bookkeeping. You have to understand the difference between bookkeeping and accountancy. Bookkeeping covers up to the preparation step. It's a clerical job only. It's clerical. Any layman, once we train them, they can do it. But preparing final accounts requires some accounting expertise. So automatically this comes under a broader one, accounting. Is that clear? So you have to understand the difference between bookkeeping and accounting. Very often, one-word questions you can expect to differentiate between bookkeeping and accounting. So bookkeeping is nothing but recording of transaction. Recording of transaction. Accounting is nothing but summarizing the recorded transactions. Recording up to the trial balance is bookkeeping, and based on the trial balance, you are going to summarize whether the company is doing well or not. Is called accounting. Is that okay? So bookkeeping is the base of accounting, and accounting may be named as language of accounting. So it's a base. Okay, we have the base first of all prepared up to the trial balance, and later on by preparing the trading and P&L account, now it becomes information to be shared to the management. So that's what about language of accounting. Financial statement is not a part in bookkeeping. Financial statements are nothing but trading and P&L account as well as balance sheet. Currently, the trading and P&L accounts are named as statement of profit and loss, SOPL, like, and balance sheets are named as financial position. Okay, financial position, right? Currently. So this will not be a part of bookkeeping, is a part in accounting, right? Managerial decision. bookkeeping will not help. We cannot make any decisions based on the trial balance, but based on the final accounts can be taken. So based on the GP, NP, and assets available, the management makes some decisions whether the business is performing better or not. And do we have any subfield? If I ask that question, in case of bookkeeping, no, sir. In case of accounting, yes. So what is called subfield, right? Accounting, there may be variations like management accounting, cost accounting, human resource accounting. Those are called subfield, additional study. So all these things put together will be falling under accounting only, not under bookkeeping. So we have subfields for accounting, not in bookkeeping. Financial position is nothing but balance sheet and their performances. In bookkeeping, we cannot ascertain that, but in accounting, we can ascertain. So predominantly, when it's all about the difference between bookkeeping and accounting, you have to understand the main point. Up to the preparation of trial balance falls under bookkeeping and clerical in nature. Apart from that, by including the statements of financial reports, okay, like a P&L account as well as financial position, this becomes accounting. It's a bit advanced than the bookkeeping, right? And what is the use of financial statements and who are going to use this? The user of financial statement may be classified into two broader categories. One is internal, another one is external. Internal is nothing but the management and employees. Okay, so the management who invested and worked hard and took the risk of sharing any profit and loss also. So wants to know whether the business is really making good profit or not. So to find out the profitability or not, they need to have financial statements. For the employees to claim the bonus, they want to know the financial performances. So they need to know the financial reports for claiming the bonus. In case of external, we have the lenders, suppliers, customers, governments, investors, public. Any third party will be called as third party, external parties. They are also interested to know about our financial reports, because if the lenders being, they need to verify whether this company is capable of repaying the loan. In that case, only they will lend the loan. So they are interested to know the financial reports. Okay, based on that, only they can lend. To know whether their solvency position or repaying capacity is sufficient or not. So for that, the financial report is required. Suppliers, and to decide the credit policy. Suppliers, okay, all the suppliers, okay, creditors, right? Before selling the goods, they have to be cautious whether the amount sold in credit is recoverable or not. If I show my balance sheet seems to be very weak and I don't have cash balance at all, so there will be very cautious. The suppliers will be very cautious to sell the goods in credit. In case of customers, and ensure prompt supply. Okay, what happens in case of customers? If the financial report is perfect enough and having stable for more than some years, reflects that the business is doing wonderfully, wonderful, and definitely customers are also very happy that they will be delivered with the goods in time. Okay, if the company is weaker, they will be having the doubt. So you may see lots of call for orders. Okay, lot of call for order and like quotations. Okay, while expecting the customers will demand this much of criteria you need to possess, only then you can come for a business with us, otherwise you don't come. That's how they will restrict the companies to come to us as a customer, right? Government to levy the tax, investor to invest in this company or not can be decided based on the financial report. And in case of public, for the employment or general information or research and development purpose, they may use the financial statements. Now, what are the main objectives of accounting? What are the main objectives? So main objective is nothing but systematic accounting records and ascertaining result, ascertaining financial position, ascertaining financial performances, and communicate information. These are the objectives. So maintaining the records and to know the results of the company, financial position and financial performances, and communicate. So maintaining accounting records is nothing but bookkeeping, journal entry, and ledger. To know the results is nothing but trading and P&L account. Financial position is nothing but balance sheet. Financial performance is nothing but solvency position. Will they be able to settle the money in due? Any dues that is there or not, right? So the due should be paid in due course. So that will come under solvency position. Outstanding liabilities will be promptly paid. That will be called as solvency position or financial performance. And communicate this to various users of accounts. Clear? And main functions of accounting. Okay, main functions: measurement, forecasting. Okay, measurement is nothing but measuring what the company did in the past as well as current. Forecasting is nothing but future. So based on the future expectation, you can plan to expand your business or downsize your business. So your subsequent year's decision is based on the previous year's result. And comparison and evaluation also be possible by comparing the earlier year's financial reports with the current year's financial reports to decide whether the company is growing or not. Similarly, you can compare with the other companies' performances and our company's performance. All other companies in steel industry may generate around 12 to 18 percentage GP ratio, but our company generates around 24 percentage. Seems to be better company like. So that's how we can compare with the other companies also. If there is a weakness in our side, we can try to control those things also. Fifth point, and you have to again meet the government regulations as well as taxation. So these are the functions of an accounting. If you are going to be appointed as an accounts officer, so you may be involving all these activities. Okay, in small company, you may be involving for taking care of all these actions and functions. In case of large companies, no, for each and every element, there will be some division and some head will be there. Okay, in BHL, like no big company, only for receivables management, there will be a team of employees working. And only for the payables, a team will be working. Only for the investments, for the capital requirement, a team will be working. Collectively, there will be CFO. So all these things are functions of the financial accounting professionals, right? And accounting has some limitations. Okay, so like loyalty and skill employees. Okay, skill of employees ignores qualitative elements and records past events, not the future performances. Accounts is all about showing only the past events, not the future. So we are in need of future. I don't want what happened in earlier days, but I want to know what happens in the coming days. But the accounts will not reflect that one, right? So accounts preparing only the past year's information. Ignores inflation. We never bother about inflation, right? So you might have purchased the plant and machinery, land and building around 20 or 30 years ago. 30 years ago, the land and building may be 1 lakh. Today, the land and building may be 1 crore also. But you show in your balance sheet that land and buildings value as 1 lakh only. Still, I could remember LIC. They have a building, right? So LIC Tower, right, in Chennai. If you go and refer, the building's value in their financial report may be around 1 lakh or 1.5 lakhs. Today, even the rent for 100 square feet comes around 1 lakh. LIC, right, in Chennai. Even Trichy also, they have their own office. The price may be 1 rupee or 2 rupees like, because purchased for 30 years or 40 years ago, year on year they claim the depreciation. Today the value is very lesser. But land values boomed up, right? But anyhow, we never bother about adjusting their value as per today's worth. So inflation will have the vital role, but we never bother about that. In some cases, of course, we have inflation also adjusted like AS number 11, 26, 28. That you will study along with your final means inter level. No need to worry about these things. Accounting standards, right? And bias of accountant. Okay, there may be bias. The personal interest will be there. So always know the management decides to show good profit, then insisted the accountant to make somehow profitable for this company. So, but there may be chances of bias also. Okay, probably they may spend the money in BHL. I could still remember they paved a beautiful tar road. Okay, so costing rupees 20 or 25 lakhs. Okay, so roughly some number 20 or 25 lakhs. They paved beautiful tar road on 24th March, like 24th March. Auditor came for investigation on 5th March. Okay, so 5th March came and it just started verifying the balance sheet. Seeing the balance sheet assets, got shocked because he came by car and it was full of potholes in the road and could not drive properly inside the BHL campus. But seeing the balance sheet showing an asset for the land, means especially road, 25 lakhs worth, is just shocked. You told me there is an asset for 25 lakhs, but I came in a road full of potholes. What happened here? Sir, 24th we laid the beautiful road. On 30th March, heavy rain immediately after a couple of days before the road got set. Because of the heavy flood-like rain, spoiled all the roads, sir. As per accounts, 25 lakhs, and I subtracted the depreciation 1 lakh, so now it is 24 lakhs. No, it's biased one. Okay, why it is biased one? 25 lakhs is the original asset actually you laid, but anyhow because of the fire flood it got totally distracted. So now it's worthless. Now it is worthless. You have to show. Similarly, in another cooperative society, they are trading and P&L account. Okay, so opening stock being 100,000, okay, or 100 lakhs, purchases being thousands, okay, closing stock around 600. Similarly, here sales 1,000 rupees. Now, what about the GP? So I can make this way: opening stock being 10,000, opening stock being 10,000, closing stock being 10,500, sales being 1,000, so 11,500, 11,500, 500 is a GP, 500 is a GP. What is a GPR? GP by sales in 100, GP is 500 and sales being 1,000. So the GPR is 50%. That's how the cooperative society showed their financial reports. Now, what's the problem here is exorbitant closing stock. One of our auditors went for investigation of stock audit. He saw the closing stock worth rupees 10,500. All the saris, cooperative society, right? So saris are displayed there. He just investigated. All the saris were there and intact. Suddenly he had a doubt. He just took one sari to investigate. The moment he took no, the sari seems to be very worthless, and all the thread came tore off. Okay, so loose, cannot be saleable at all. Then investigated what happens for this sir. These sari woven almost 15 years ago, sir, remains unsold. As you are aware about that, the stock remains unsold, will be the closing stock, goes to the balance sheet. So almost huge stock in the beginning and the end appears in the trading account. He got a doubt. He went and investigated. Of course, all the saris are there, but all the saris now not fit for usage. Immediately he reported, I cannot sanction that this company made a 50% gain. So he told, sir, today's worth of this 10,500 is not more than 500, sir. All the saris woven almost 10 to 15 years ago may not be suitable for today's purpose. So you have to cancel those things. If I cancel this, what happens? The closing stock as per the auditor report is 500. So wait, total this, what happens? 1,000 plus 500, 1,500, and 10,000 plus 1,000, 11,000, and 11,000. And after subtracting 5,000, 9,500 is a gross loss, huge loss. But immediately that management negotiated, sir, somehow save us, otherwise they will chase me out. That's how the things are there. Those things are also be possible. Bias as well as danger of window dressing. So window dressing is nothing but if you see a house from outside through the window, the house looks beautiful. So when you enter into the house, no, all the corrupt things will be there. Okay, it's hidden. That's called window dressing. Okay. So in Kuam and Chennai, right, you have heard about, right, Kuam. So in a movie also it is stated like wholesale ditch like. Okay, wholesale underground ditch like in Kuam. So when the ministers and chief prime ministers are visiting nearby Kuam, okay, while crossing the Kuam, no. So see, it seems to be ditch like, no. How can we make it beautiful? You can do some other digging and other things, and you can make it beautiful and go for renovation. Swachh Bharat like and take action. But the entire government just to build a compound wall near the Kuam and hiding that totally. That's called window dressing. That city seems to be beautiful, but if you go beyond that wall, you'll see the ditch. So that is called window dressing. That is called window dressing. Those things are also be possible in case of accounting, which is called limitations of accounting. Is that clear? Now, objectives of bookkeeping: recording transaction as well as ascertaining the financial effects. That's all, very simple. Already told you, subfields of accounting, branches. So we have accounts, subfields in accounts, not in bookkeeping. Subfields are financial account, cost account, management account, social responsibility account, and human resource accounting. These are the subfields we have. Right, you understand? financial accounting, cost accounting, management accounting. See, you see that in a company trading account and balance sheet, okay, sales being 1000, cost being 500 rupees, and your GP being 500 rupees. Asset they have is only 200 rupees. Okay, asset they have is only 200 rupees, and cash balance they have around 500 rupees. So capital being 200 rupees, the entire GP becomes cash balance, then there is nothing but profit and loss, which is 500 rupees. Come on, check, is the company performing better or not? For 1000 rupees, 500 is the GP. GP by sales into 100. Isn't it? Out of 1000 rupees, 500 is your profit, means 50% is your GPR. And your total investment being 200, this 500 rupees is nothing but earned in this year. The profit becomes cash balance. Anyhow, you invested only 200 rupees. For the 200 rupees of investment, 500 rupees will be your return. That is called return on asset. So you earned, not rather than net GP, I can make it net profit also. Net profit also, right? Net profit by asset. So I made a profit of 500 rupees for just 200 rupees of investment, means almost how much? 250% return is there. 250%. If I tell you, sir, if you invest here 100 rupees, you will be getting 250 rupees profit. Seems to be very, very lucrative business. Gives huge profit. Just 100 rupees if you invest, in a matter of 1 year, you will be getting 250 rupees bonus or cash benefit. Right. Where, sir? In Sahasri Singar Academy. In SSA, if you invest just 200 rupees, you can get around 500 rupees profit. Then would you like to invest in this business or not? So if you want to purchase this business, I am willing to sell this business. So you can go and purchase my business. Just investment is very less, sir. Huge profit is there. Okay. All the tuition centers will run this way only. Most of the cases. Investment is very, very small amount. Even anybody knowing some subject can start the tuitions in their own home. Okay. Requires no extra thing. Only a pen is required and some 2 or 3 years is more than enough to start the tuitions classes. Similarly, you can also start Singar Academy. For 100 rupees, one pen investment, you can earn good money. So only 500 rupees, 200 rupees gives you 500 rupees. Immediately the next day you purchase my business. Sir, what's your worth, sir? Sir, only 700 rupees. Okay, give me entire 700 or only 200 rupees for the assets. I don't want the cash. Only 200, I'm willing to pay the 200 rupees. I'll take the business. I just then leave. The next day what happens? Okay, on transferring the SSA to you, Sridhar will also go out. Now what happens now? There's a trouble. You need to replace Sridhar. So if you want to replace some different faculty like Sridhar, it will be expensive. Then that fellow demands around, sir, I want 1000 rupees. Then what happens? 500 plus 1000, 1500, your sales revenue, fees collection is 1000, 5000 only, so 500 will be the gross loss. So now the question is Sridhar's value is given anywhere in the balance sheet? So if you want to decide whether the company is performing better or not, you have to consider all the assets also, no. So in the balance sheet, you have to put Sridhar's name also, say 2000 rupees. Now think, we need to invest 2200 rupees to earn only 500 rupees. Now the business is not so profitable. Isn't it? So you are purchasing only the tables and chairs, not the knowledge pool here. Is that okay? So it's logically the business could not be valued properly if you are not considering the skilled laborers in that company. TCS company, Wipro company, whatever it may be, should not value based on what? Only the machines. You have to value the trained employees also in that organization. You might have heard about if the resignation happens in bulk, then there will be slight problem for the profitability of the company, because all the employees got trained, and because of the trained employee, the company makes good profit. Suddenly overnight, around 20 or 30% employees left the job, automatically there will be small trouble for the company. Then what happened? All the IT companies put together, if the employees are leaving from TCS, don't ask them, don't give the job in other IT sector. That's how the IT companies are made a decision. So it is not only the materials matters, it's what about the knowledge pool also matters. Now you have to value that knowledge pool and show that as an asset so that the real value of the assets can be found out. Now the real value of assets in this case, if I include human resource value also, 2000 plus 2200 will be your investment and your net profit is only 500. Now the return is very less. Now the return is lesser, not like this much exorbitant one. So such a way we have to value the human resource also, right? So that's called human resource accounting. To know investments made in human resource and its impact also be incorporated. Otherwise, this valuation seems to be not good one. So you'll study all these things at your final level. Even you have social responsibility also. Okay, company A, company B, company A and company B. Company A, for 1000 rupees of investment, you get only 5 rupees return. Only 5 rupees. Then what about your return? What about your return? Come on, 5 rupees per 1000. 0.5 percentage, am I right? 0.5 percentage. Another company, isn't it? So another company, around 600 rupees is your profit for 1000 rupees. Come on. 60 percentage. Which company is very, very important? Which company is very, very important? This company is nothing but schools and colleges run by government. This company is nothing but TASMAC. Sir, second one is most important, sir. Tell me. So what is the revenue for the schools? See, every teacher gets around 1 lakh to 1.5 lakhs per month salary. Okay. For a plus 2 class, at least 2 teachers are in need. 2 teachers are in need. Per teacher gets around 1 lakh roughly. Okay, for 2 teachers, 2 lakhs. For 12 months, 24 lakhs is the salary. If the salary itself 24 lakhs, that space and other thing cost us another 24 lakhs. Usually, overall cost no in that 20 or 15% only will be the salary cost, employee cost. You assume 50% salary cost, another 24 lakhs maybe for what? Okay, almost 50 lakhs approximately. Okay, for conducting 1 year's coaching for plus 2 students in any schools, any government schools. In government schools, what is the fees collected? 0. Otherwise, fees collected and free wares are given. Free books, free uniform, free cycle. Okay, let's see here. 40 students should study. For 40 students, this is the cost. Otherwise, you make it 50 students. 50 lakhs divided by 50 students, it costs us 1 lakh to train per student in government schools. Okay. If any private schools demands 1 lakh per plus 1 student, what will your comment? What will be your comment? Sir, this is robbery, sir. This private schools are cheating. They are swindling the money. But what happens here? Have you calculated this one? This is the reality. 1 lakh government spends to educate students in their school, in government schools for 1 year. 1 lakh rupees. Instead of giving plus 1 and plus 2 free, if the government offers you 1 lakh rupees per year, per month, okay, per year, what will you do? Will you study in government school or will you get 1 lakh and study in private schools? So very simple, naturally. So this is the calculations. Once I had a chat with one of my friends and others. Okay, sir, government schools charging very less, sir. Private schools are taking robbery, like lots of fees collected, sir. Then I explained, what about the fees? This is the cost for training plus 1 students in government schools. At whose cost? Those who are working hard, their tax money. So others' tax money, as the people are studying in government schools, will be the trouble. That's why we are not questioning the quality of education in government schools. If you are demanding to give the quality of education, this will be the cost. 1 lakh. So 1 lakh rupees will be the cost. Now, what about the TASMAC? TASMAC gives huge profit. Can the government run this one or this one? Running the TASMAC gives more profit, but the next few years later, you will have all the drunkards in Tamil Nadu. Means social responsibility is now affected. Okay, so here 0.5 percentage revenue by running the schools, but after some years, all the students get educated, getting placed in employment, their revenue contributes as a tax revenue for the government maybe around 50% later, not today. And you'll have the well-educated team in the society. But what happens here? 60% revenue after sometimes, now it's government's responsibility to take care of them. Free food, free hospital service, that costs us around 70% cost. All the drunkards, sometimes later they don't have the money to earn and loitering here in the road, and at the final day their health also deteriorated. They don't have the money to spend for their health benefits. They have to be hospitalized and run by the government at free of cost. And for that, the government has to spend how much? 70% of revenue. That's called social responsibility. We will not consider about only profit. Okay, is that corporate having any responsibility to build a good good society or not? So responsibility of building good society is also matter. So you have to verify whether the socially building stronger or not also. ITC company, tobacco company, cigarette selling gives huge profit. Okay, will it be really building the economical development? It affects the social development, right? So you have to find out not only the profit, that profit is associated with the social development also. That's called social responsibility accounting. This social responsibility accounting and human resource accounting will study at your final level. There is a top subject called BVM, Business Valuation Model. Okay, so there will be studying all these things. Apart from the cost accounting and management accounting, these are called subfields of accounting. Is that clear? Now, role of accountant in society. Once you become accountant, what will you do in the society? Very simple. Audit. You can do the audit. You can maintain the books of account. You can go for audit. Either it may be statutory audit or internal audit. Statutory audit is nothing but legal requirement. Okay, you have to audit and submit to the government for payment of taxes called statutory audit. Before that, for the management's purpose to know whether there is any theft happened, malpractice happened, they need to audit themselves for their own requirement. For that, they will have the internal audit. And taxation also you can do, and you can be having consultancy services, financial advice like investment advice, insurance, business expansion, pension schemes, all you can give the advices. Other work also be taken care by the accountant. Hope now you'll be able to understand the basics, a small background of accounts. Now let's start with very, very important topics: concepts, principles, and conventions. Accounting basis. How you are going to record your books of accounts? Okay, so you can prepare your accounts on accrual basis, or cash basis, or hybrid basis, Currently, we follow only which method? Mercantile system. Okay, if the rent seems to be outstanding, you add the rent and post that as an expenses. 10 months rent paid, 2 months rent remains outstanding. What is the expenses for the period? You have to find out the 12 months rent, that is the expenses. To the extent actual payment will be considered as your expenses, which is called cash basis. Cash basis. Under hybrid system, a part will be based on accrual basis, a part will be the cash basis. So, for example, rent per month being 10,000. Paid rupees 1 lakh per annum. Paid rupees 1 lakh per annum. Is that okay? Similarly, receipt per month 15,000 per month. Okay. Or income. Income may be 15,000 per month. But actual receipt or receipt, okay, receipt being 1,60,000 per annum. Clear? Now, under accrual system, under cash system, cash basis, under hybrid basis. How are you going to record this? Hybrid. Okay. Now, under accrual system, rent per month is 10,000 into 12 months. How much it should be? 1,20,000 is the rental expenses. Is that clear? Now, what about the income? 15,000 per month into 12 months is the income. Whether you receive or not, actual amount recoverable for the period will be your income. So, 15,000 into 12, 1,80,000 rupees will be your income. Now, what about your profit? Your profit is 60. Okay, this is under what system? Accrual system. Under cash system, what is the actual rent paid? 1 lakh. Then 1 lakh will be your rental expenses. What is your income? Actual income received being 1,60,000. Okay. So the difference between these two is your net profit. Is that clear? This is called cash basis. This is called cash basis. What happens in case of hybrid basis, sir? In case of rent, expenses will be accrual model. Income should be on cash basis. That's how we post in our books of accounts. This is called hybrid. So in case of expenses, 10,000 into 12, 1,20,000 will be the rent expenses. What about your income? Only based on the actual receipt will be taken. Okay. Income receipt. How much? 1,60,000. Then if you tally this, what is your income? 40,000 is the net profit. Hope you will be now able to understand. These are the three bases are there. Who follows the hybrid system? Usually professionals, doctors, engineers, advocates, because the fees they fix no arbitrary. Okay, arbitrary means they will not demand like any other products. Go to stationery mart and buy a note. If the price of the note being 15 rupees or 20 rupees, how much will you pay? You'll pay fully. Pen 20 rupees, you pay 20 rupees. Buy some fruits and vegetables, how much you will pay? What the price finalist will be payable. What happens in case of tuitions? What happens in case of doctor for a longer treatment? What happens in case of advocate services? Okay, advocate says, okay, there's an issue, sir, there's a family dispute, sir, I want to set this through court. The judge says, okay, the advocate says, okay, give me a fees. How much is the fees? Per time it's 1,500. Per visit, per consultancy. That's how they'll fix the fees. So 3 times he paid 1,500, 3 times. The 4th time, sir, wait, sir, we don't have any progress. Give me consultancy, I will pay later. That's all. Once he leaves, thereafter he will not come at all. So the 4th consultancy fees, 1,500, may not be recoverable. In professionals, like these cases, doctors, engineers, advocates, even professionals like CACMA, in those cases, no, we don't have what? We don't have guaranteed outstanding recoverability. In that case, they consider, in case of income, only on receipt basis is followed. What about the payments, sir? Doctor has a clinic. Okay. On receipt of fees only, he records that as an income. But rent, for the 12 months, he paid only 1 lakh. Okay. Will he say that I won't pay the remaining 20? That's how the next day landlord will come and throw the doctor away. May happen. So, for the expenses, no other way he has to follow accrual basis. But for the income, he may follow cash basis. Okay. So, when it happens most of the skin doctor's case, I have seen, when you go for any skin treatment, the fees demanded by the doctors are exorbitant. You cannot estimate that one also. They say consultancy fees only 250. Thereafter, medicines and other diagnosis and scan and other things, it costs us around 4,000, 5,000 rupees. Like immediately the patients are 300 rupees spending. Okay, you come and pay the remaining later on. Then later on the patient will not come at all. So whatever the amount collected will be considered as income for the professionals. But what are the payments supposed to do, whether paid or not, will be expenses only. Will this be accepted, sir? Yes, in taxation you can follow either this method or that method. Both the methods are acceptable. So we have three bases of accounting. One is mercantile basis, another one is cash basis, another one is hybrid. In hybrid, income will be recorded on cash basis, expenses are posted based on accrual basis. Is that okay? So basis of accounting. Now let's start with the concepts. Concepts, principles, conventions. Concepts, nothing but assumption having universal applications for accounting preparation. Universal applications. Okay. So, see, this is assumption only, but it is followed by all the people, all the accountant in the various industry. Okay, in various industry. Clear. Now, what about the conventions? Also assumption not have universal application, but usage and practice only confirms this one. What happens to the college goers? College goers, in case of regular college students or school students. Okay, will the college announce that Sunday is holiday? Announcing or not? No. It's default. Everybody knows that Sunday is holiday. Suddenly, a Wednesday, because of some reason, the college makes a decision to give leave or holiday. Then what happens? This holiday requires announcement, isn't it? This one requires no announcement because all the students will know about this. It is assumed the Sunday and Saturday being holiday only. Okay, in case of special cases, it will be notified. In case the management decides to have a gathering in Sunday, they will call for. They will announce tomorrow no holiday, you have to visit. Understand? What happens in the SSA? We have to intimate. We have to intimate. So this is universal application. What we follow in Singar Academy not have universal application. Not have universal application. What can I do now here? All the students joining in colleges and working in some offices get leave only in Sundays as well as in the evening. So I have to arrange the classes according to their conveniences. So I have to allot the timing based on the requirement of the students only. So I have to announce this day is a working day, this day is full day class, like all these things are announced. Okay, but you are able to understand that. So if there is any government holiday, actually holiday means you will be very happy. But whenever you are studying in Singar Academy, holiday means maybe different. Right. So you understand. So it's having no universal application because of our practice we follow in Singar Academy. This will not be applicable for the other institutions, other places. This is called convention. So if I do consistently one method of accounting for my company, I can follow that because it's my practice to follow since very long ago. But generally, everybody follow this one, then it's called concept. Principle is nothing but, see, rule. R-U-L-E, ends with L-E. Okay. Assumption. Similarly, in principle also it ends with LE. Very simple. Because don't get confused with the principle. Okay. Institution, head of institution. We never bother about that. So you can easily link AL, it ends with LE. So rule also ends with LE. Rules and regulations to be followed will be called as principles. Okay. So whenever you post the closing stock here, trading account, closing stock, how can you value this, sir? How can you value the closing stock? So we have what? FIFO method of valuing, LIFO method of valuing, weighted average method of valuing. Okay, n number of methods are there. You will study all these things at your inventory chapter, CA foundation. Inter students can study in your costing chapter. So there you will study. We have n number of methods, even accounting standards number 2, there also you can study. Okay. So we have 2 or 3 models for valuing the closing stock. Then what model I can choose, sir? There are some rules. As per the rules, you can choose current practices and guide for selection of conventions where alternative exists. So we have alternatives. In case of depreciation, we can follow WDV method as well as SLM method. You have 2 alternatives. Which method you have to follow, sir? Go and refer the rules. What you do regularly in your company earlier and what the other things suggesting you, probably legal suggestion. Based on that, you can either choose WDV or SLM method. Hope you will be now able to understand the 3 terms here. What are they? Concepts, principles, and conventions. Concepts having universal application, also assumption. And conventions not having the universal applications, but selected companies can follow based on their earlier years practice. Okay. And principles is nothing but rules when we have the alternatives to be chosen. So concepts, principles, and conventions. What are the list of concepts are there? So now the concepts and conventions are grouped into single item, only called as concepts only, or concepts and conventions short. In CA book, no, both will be called as concepts only. We don't have the separate classification for the conventions. So we have been given around 13 concepts and conventions. All the 13s are most important. Here are there one word questions may be asked very often. At least 2 to 3 marks you can expect from the convention or the concepts, or it will be having some other applications also in the later study. We'll start with the first one, concept. NTD concept. As per the NTD concept, owner and business are not same. Because of this reason only, any amount transferred from owner to business named as capital. Similarly, any amount transferred from the business to owner is named as drawing. Because NTD concept, that is separate, he is separate. NTD is separate and the owner is separate. Okay. Owner and business not same. Owner and business are not same. Clear? Second one is money measurement concept. Money measurement concept. Okay. Second part. In case of money measurement concept, B. A transfers, say, 1 crore and B transfers house property to A, 1 crore. Is that okay? Now, what is the journal entry for this? In the books of A, house property account debit to cash or bank. Okay. You can pass the entry for this. What about the entry for registration of this house property in the name of A? Just merely handing over the key from B to, or transferring the key from B to A and transferring 1 crore from A to B will not be sufficient. So now the registration should be done. As per the legal, A becomes owner only if it is documented. Documentation will be called registration. Okay. Now come and tell me. You have to pass the journal entry for this one, right? What's that? House property account debit to bank. Value being 1C. What about the journal entry for this? No entry. But these two are combined. Not only handing over the cash and getting the key. It should be registered in A's name also, purchaser's name. And B has to register. He has to sign and agree for sale with the registrar. Otherwise, the sale is maybe cheating like. But you pass the entry for this one, no entry for this one. Because this transaction can be measurable in terms of money. This transaction cannot be measurable in money. It's only signing. It's the legal provisions, procedures. This is only legal procedure. It's what about the transaction involving money? If the transaction can be measurable in terms of money, only then that will be posted in your books of accounts as journal entry or subsidiary books. Only will be recorded. Money measurement concept. Transaction measurable in money only are recorded. A fight between two employees, what happens? Definitely it spoils the production. The spoil of production will make a loss for the production output. Yet we cannot record that the fight in the organization. An appreciation given to the employee also cannot be recorded because all these things are non-measurable in terms of money. If the transaction cannot be measurable in money, it will not be posted in the books of accounts. Is that clear? Hope now you will be able to understand. And third one, Accounting period concepts. Accounting period concepts. Okay. Otherwise named as periodicity time period concept. So anyhow, what happens? So have you completed your 10th standard or 12th standard or UG? If I ask the question, you can say I completed 10th standard in this year, so and so. Okay, you have completed 10th standard, right? So get ready. I'm going to have the test from 9th standard book. What will be your answer? Sir, I stood topper in the school, sir, in 10th standard, but I could not remember whatever the things I learned at 7th standard, 8th standard. So the 10th standard result gives you an opinion that you have completed 10th standard, means you are aware about all the content up to 10th standard, but really it's not so. Anyhow, the results of your progress in education can be measured once in every year. Rather than that way, exam is conducted for 10th, comprising all the topics from 1st standard to 10th standard. What happens then? So you keep studying 10th standard only. So 1st standard to 10th standard. Am I right? So for the 7th standard, a small lot is given. Try to finish up that one. Once it is over, we'll go for the 8th standard and finish up that one. Small amount. Okay, to this chapter extent, you finish up 7th standard. Thereafter, some extent, similarly, I want to know the performance of the company, not at a whole. 100 years ago, the business started. I want to calculate the profit and loss at the time of closure only, which is not practically possible. I want to know what's the company's performance now and then periodically. So that's why the periodicity concept is very, very important. So we usually calculate the profit and loss for a period named as financial year, starting with the 1st April and ends with the 31st March in India. It may be different to some other countries. In USA, it's always calendar year. Starts with 1st January, ends with December. Is that okay? Income and expenses are accounted for a financial year. This is called periodicity concept. Periodicity concept. Okay. Now let's move on to the next one. Accrual concept, that you know that. Okay. You will record the transaction on occurrence, not paid. Okay. Only when the expense is paid, you will be recording, means it's called payment basis, cash basis. But we usually follow which method? Accrual system. As per the accrual system, once you enjoy the facilities, you have to pay for that. Whether you pay it or not, it will be your expenses. Okay. Outstanding will also be addable. That's called accrual concept. And next one is all about matching concept. Okay. So expenses should be matched with revenue of that period. If I supposed to prepare for 1st April 2024 and ends on 31st March 2025, is that okay? This is the year. I want to know what about the income of this period. Income of this period as per accrual concept being 1 lakh. Okay, 1 lakh. I have to find out what is the expenses for this period. Expenses for the period means actual expenses for the period based on accrual concept. Whether you paid or not, once occurrence happened, then immediately you have to take probably 80,000 rupees. So 80,000 rupees being the expenses, income being 1 lakh, the difference between these two is your result. Okay. So matching the expenses with the income for this period is called matching concept. So all expenses and revenue are matched or compared, provided. Okay, you have to compare this expenses for this period as well as income also for this period. Comparing, sir, expenses is for 1/4/24 to 31st March 25, sir, but income is for 1/1/24 to 1/7/25. Can it be comparable? No, sir. It is not be comparable. You have to compare the income and expenditure for the concerned period you have chosen, right? This is called matching concept. The difference between these two is called periodic profit. Means the profit for the year 24-25 and compared with the matched with the periodic revenue and periodic expenses. This is called matching concept. Finally, going concern concept. So what is called going concern concept? The business will have long life. Okay, no intention for liquidation. As per the going concern concept only, okay, understand. any receipts and payment will be considered as either income or assets, income or revenue or assets. Okay, if the business has long life, then payment you have done for purchasing the building will be called as asset. Similarly, payment for occupancy of building by way of rent, the rent payment will have very shorter period of enjoyability, so it's an expenses. This payment for the building will be considered as an asset only when two conditions are satisfied. One is this building will be useful for the company for more than 1 year. More than 1 year. Not only that, the business should exist for more than 1 year. Two conditions. So assets should give the benefit for more than 1 year. Business should live for more than 1 year. In these two satisfaction of these two conditions, that payment will be considered as your asset. Clear? Come on. What happens? Studying CA, asset, expenses or loss. Studying CA or CMA will be called asset, expenses or loss. Sir, if I pass, sir, asset, sir. If I fail, maybe expenses, maybe loss. Without studying, if I fail, then loss. Studying yet to fail, then expenses. Why, sir? You studied something, some extra knowledge you have at least. But if you have the certification, you have what? Signing power later, it's an asset. You will generate revenue for a long period. Right. Isn't it? So you think you passed. You pass. Okay. What about your situation? You pass. Then asset. At the time of receiving the result, you got some ill health and went to the doctor for verification or health checkup. The doctor said, so it's a final stage of cancer, you will live for another 2 months only. Now just tell, you could have told this at least 5 years, 3 years back. Instead of joining for CA, I could have enjoyed my life with all the expenses, all this cash spending. Right. So what happens then? Your life is also infinite. So you pass and life is also infinite. Once you pass, you will enjoy the benefits for more than 1 year. Okay. Pass and got certification, and the certification is useful for more than 1 year, and you also live for more than 1 year. On satisfaction of these two conditions only, the CA becomes asset. Here, if the business is going to be shut down in a matter of 1 year, will have only 1 year life. What's the use of building? You are supposed to close the building. Thereafter, you no need to, your business, you are not required to keep the building at all. So then this building becomes what? Expenses are loss. Expenses are loss. Is that clear? So to decide whether the payment is your asset or liability, asset or expenses, you have to consider the going concern concept. Two aspects. Going concern, the business will have long life. Another one is what? The payment gives you benefit for more than 1 year. So these conditions are satisfied, then automatically it is considered as asset, going concern concept. Right. Now, cost concept. So while showing or recording in your books, you record at its own historical cost, acquisition cost. You have to show at the acquisition cost. In your balance sheet, okay, land and building, whatever it may be, you purchased 10 years ago for 10 lakhs, you continue to show at its own value. Today, the land and buildings value may be totally different, yet you'll show at the same purchase price only. Each and every year, you are not going to revalue based on the today's market value. This is called cost concept. Actual cost, what you spend with the base, you are going to show only that value. Okay, you have to show only that one. Is that clear? This is called cost concept. Historical cost or actual acquisition cost will be taken. And realization concept. You pass the entry only on realization of the transaction. Realization of the transaction. In final accounts, I guided you about sale on approval basis. Sale on approval basis. Am I right? Sale on approval basis. A sends goods to B rupees 100 by adding 20 rupees profit. Sale price. On 25th March 25. 25th March 25. And A has given 1 month for confirmation. For 1 month return policy. So A sells the goods to B, stating that, sir, keep it with you, use and get satisfied and confirm me, I am very happy. Else you just return. Then you can return it. So B is also okay. As on 31st March 25, this remains pending to be written. Pending to be written or confirmed. While preparing the trading account in the books of A, sales may be 120. Actually, while selling the goods, the entry being B account debit to sales. You know the cost of this being 100 rupees. Can I say that, sir, there is a profit 20 rupees here? No, because this sale is not confirmed. At any time in future, it may be returnable. If I consider this being the sales in this period, you realize 20 rupees profit, you are pretty happy this year, you made good profit. Or the salesman may demand the commission also. So if he demands, sir, I sold it for 120, give me the commission, you have to immediately tell him, wait, I need to get the confirmation of the sales. Only the sale is confirmed and I will give the commission. Similarly, on preparation of trading and P&L account on 31st March 25, verify if there is any sale remains pending to be approved from the customer side. Yes, sir, this is remaining pending. Then you have to subtract that pending amount here and show this being your closing stock, unsold stock. Okay, so 120 minus 120, 0. This 120 remains unsold, so you subtract this. As it remains unsold, it should be part of your own stock, so the stock will be posted as your asset side or in the trading accounts credit side, stock with customers like closing stock. We learned that along with the final accounts chapter, you can go and recollect that. So this is called realization concept, because on 31st March, this particular sales remains pending, not confirmed. On confirmation only, it will be sales. Until that, it's not sale. And dual aspect concept, that you are pretty sure with the dual aspect concept. Every transaction will have two aspects. Okay, a debit and credit, vice versa. That's called dual aspect concept. Otherwise, it may be named as accounting equation approach. Equity is equal to assets minus liabilities, or otherwise, asset is equal to capital plus liabilities, or whatever the mode may be, you can post that. You can frame the format. And consistency approach, consistency concept. If you follow WDV method of accounting for the past 5 years, and in the next year also you have to follow what WDV method only. You should not choose as you wish. Last year we followed WDV method of depreciation, sir. In this year I shift myself from WDV to SLM. Next year I will follow the other method, sir. Can I do as I wish? No. Once you have chosen and confirmed based on the principles, right? What does it mean? Principle. When we have the alternatives, you have some certain rules to choose the best options among the available alternatives. So once you have chosen, the WDV method is good, or FIFO method of valuation is good. Once you have chosen, you have to follow that year after year. Should not shift yourself from here to there once now and then. That's not acceptable. As per which policy? Consistency concept. Consistency concept. Okay. Now, conservatism. Conservatism. Okay, we have revenue, income and expenses. Income and expenses. Is that okay? What conservatism concept says is very important. As per conservatism concept, income will be shown or recorded on confirmation. On confirmation. Once it is realized, it will be income. Okay, customer comes to my office, demands some product and takes the product with him and tells to me, wait for 2 days, sir, I will confirm later. I will confirm later. That's how it tells to me. Okay. So 2 days, no. Until he confirms that it's not sales, it should not be considered as a sale. Once he says, okay, sir, I will have the advance money, balance I will pay within 1 week, then it is considered as confirmed one, then it will be your income. But in case of expenses, realized means actual expenses you enjoyed, for that you have to pay. Even any small doubt you have for payment, that should also be considered for. You have to make the provisions. In your P&L account, realized amount being 100, in your expenses side, realized the paid value, okay, realized value being 60, and there's a small doubt to pay some 20 or 30 rupees later, that 30 will also be posted here. Okay, in case of loss or expenses, even small doubt will be considered as you have to make the payment. This is called conservatism. For example, father and son, you just think over. Your dad says from Trichy to Chennai. So he says that from Trichy to Chennai, one-way trip cost us 1,000 rupees, and for returning another 1,000 rupees. And to stay there for a day, it costs us another 1,000 rupees. Your dad says, go to Chennai. My friend is there. He has to give 1 lakh rupees. Collect this 1 lakh and get back. Okay, collect the 1 lakh and get back. I'll give the 1,000 plus 1,000 plus 1,000, 3,000 rupees. You can subtract. Your dad says, okay, you take only 1,000, go to Chennai. Go to meet my friend. Collect 1 lakh. Spend for your food and stay expenses there and returning expenses, and return 98,000 to me later. What will be your choice? Huh? The next moment, if your friend is not there, what happens to my position? So you'll demand, give me 3,000. Going, staying, returning. I bring the 1 lakh as it is. Your dad says, no worry. My friend will be there. Okay, he will give 1 lakh. Okay, from that 1 lakh you spend 2,000. No, dad, I don't want to go. So conservatism is such a case. If you have any doubt, you have to make the provisions for that. It's called conservatism. Revenue should be recognized when there is a reasonable certainty of collectability. Amount should be collectible. But possible losses, in cases of loss, even small doubt, whether certain or not, should be provided. In case of income, only on guaranteed receipt will be considered as income. But in case of expenses, even small doubt, there is a provision for that. You have to create a provision for that. Is that clear? And before you go for preparing your financial reports, qualitative 3 characters you have to follow. One is prudence, another one is neutrality, another one is faithful representation. Okay. Prudence is nothing but anticipated losses are recognized, but anticipated profit are ignored. So, realized profit is 100, sir. But there is a small doubt. I can get another 50 rupees, sir. Okay, this is only estimated. Okay. What will be the confirmed income? Only 100 is the confirmed income, not this one. Similar to this situation. This is estimated revenue. If dad's friend is available, then you will get 1 lakh rupees. It's estimated. You will say, no, dad, I cannot go, believing this amount will be recoverable. Okay, give me 3,000 rupees. If anything goes wrong, I can manage returning with the 3,000 rupees. Okay, this will not be considered. But in case of doubtful, means expenses, realized being 60, even another doubt is there, then you have to make another 20 rupees also in your pocket. So you have to go with 80 rupees. You have to go with your 80 rupees, right? So if you travel to Trichy to Chennai and get back from Chennai to Trichy, as per your dad's instruction, leave about your dad's friend's money return. So from Trichy to Chennai, 1,000 rupees, and Chennai, it costs us 1,000 rupees for spending there. Another 1,000 rupees is returning cost. But you know that it's a Diwali season, you will not get any ticket at cheaper rate from Chennai to Trichy. Definitely the ticket cost may go up to 3,000 rupees, not 1,000. Now, what about your expectation from your dad? 1,000 plus 1,000 plus 1,000, 3,000. There is a slight doubt you need to spend another 2,000 rupees excess in case of emergency. Then how much will you take? You'll take 5,000 rupees. If nothing happens, you will return. So, in case of provision, make provision for that also. A small doubtful loss, then make the provisions. In case of estimated gain, cannot be recorded. Only on realization, it should be recorded. This is called conservatism concept. Okay, especially prudence. Prudence. Okay. Neutrality, unbiased, and faithful representation. What you show is a true one. So these are the 3 points you have to keep in your mind while preparing the financial reports. Hope you will be now able to understand. Now, what happens in case of prudence concept? In case of loss recognized, in case of profits anticipated, ignored, right? So you have to show only this one, not this one. And full disclosure concept represents, you have to show everything. It's just the reverse of the prudence concept. Full disclosure, you should not hide even single data. This is called prudence concept. Disclose all significant items, which is against to the prudence concept. Okay, sir, tell me, sir, what can I follow, sir? Conservatism or full disclosure concept, sir? Okay, so wherever it seems to be doubtful amount recoverable, okay, don't show this. This is as per conservatism concept. But if you want to disclose even small details which is required for the decision making purpose, you have to disclose even single penny. So by preparing the P&L account or trial balance, okay, what happened, you know? Okay, the total in this side being 1 lakh, the total in the debit side being 1 lakh, total in the credit side being 1 lakh 1. Come on, tell me, just 1 rupee difference. Is it a matter for you for 1 lakh rupees? Even today, 1 rupees is not a matter, right? Isn't it? Though 1 rupee is not a matter, but this 1 rupee difference may be due to some other big reasons. So if you go probing into that reason for the 1 rupee difference, you find there will be malpractice of around 20 or 30,000 rupees. Then it is called significant. Though value may be 1 rupee, but it will have a great effect. Is that okay? Then you have to disclose it properly. Clear? The last concept here is all about materiality concept. Okay. So what is called materiality concept? Okay. Okay, clear? See what happens while coming to Singar Academy, you bring around 10 rupees for bus fare and other. Okay, while entering the classroom, you lost this money. What will be your scenario? What will be your scenario? Sir, I lost 10 rupees, sir. I'll check and verify and then I'll come to the class. Or will you come to the class directly? Would you like to miss the class only for the 10 rupees? So you will just plan to attend my class. Okay. The other way, you came with the registration fees 23,500. You now missed that amount. Will you attend my class or will you cut my class? So this 10 rupees is not a matter, but this is matter. If the number seems to be insignificant, it will not have any much effect for the decision making. You can simply ignore that. But this is very, very important. It should be definitely disclosed. So materiality concept. Information influences the decision of user. This information actually influences the student's mindset to attend the classes. Then it should be disclosed, but it will not be a big issue. It's a petty thing. Okay, this not required to be. This one is not required to be disclosed. Disclosed, not required, but it is required. Clear? This is called materiality. Whether it's a matter or not. This is not a matter for me, sir, but this is a matter for me. Okay. Now, how many of you applied for the examination? Just 1 day ago, if I ask you, tomorrow is the last date. How many of you applied for the examination? Sir, I have not completed even 10%, sir. By applying the examination, I am actually losing my exam fee, sir. So I don't want to apply. But suddenly I tell you, this year there's a luck and a message I got. Those who are applied can pass as it's a corona batch, 100% result. Then what will you do? Whether you study or not, the next moment you just go and apply this, right? You keep pending to apply, right? But once you hear this message, immediately you start applying this. So the information gives you a power to decide or influences your decision, then it's called material and you have to disclose. So predominant cases for your examination purpose being this one, concept. So I have given a list of 13 concepts in an examination. I think write any 4 concepts from accounting concepts carrying around 4 marks. In another case, they explain the situation and find out what is the concept behind. Okay, we can record the transactions only when the transaction has rupee value, money measurement concept. Okay, we never bother about recording any estimated profit. What's that? conservatism concept. Such a way you can expect in your examination question. So you have to understand how to answer one word questions from this topic. Okay. Now, fundamental accounting assumption. Very often I have seen this question even at foundation and inter. Fundamental accounting assumption. We will not tell you this one. All the accountant will assume and follow the same pattern, which is called fundamental accounting assumption. Three assumptions are mandatory. Among so many concepts we have studied, no. These three assumptions are mandatory. You don't have any other choice. Okay. Sunday, holiday, you don't come. That's how college and other workplace are means notified. It's fundamental accounting assumptions. Going concern, consistency, accrual. These are the three fundamental accounting assumptions we have. We have studied all the three ahead, right? So going concern and accrual, okay, and consistency here. 10th one and going concern and accrual concept. These three concepts are base, because concept itself what? Assumptions only, universal application, will have universal application. Among them, the three are the most. What are the three? Going concern, consistency, and accrual. Clear? Now, let us deal with the components of financial statements. General purpose financial statement otherwise. So, trading and P&L account, balance sheet, cash flow statement, and notes to accounts. All the four will be called as financial statements. Usually at the inter level and foundation level, while preparing final accounts, you study only these two. Not only these two, a company wants to report their financial reports, financial performances, they have to give this one and cash flow statement also. Small explanation regarding some items. Okay, that is called notes to account, which is nothing but explanation about some of the items are these trading and P&L account and balance sheet. So all the four put together will be called as components of financial statements. Is that clear? Now, qualitative characteristics of accounting information. We have primary and non-primary. You can have a glance over that. It's very rare. Let's move on to the next one. Very, very important. So two aspects are most important. One is concept, another one is capital and revenue transaction. Now we'll be moving on to the capital and revenue transactions. Okay. Now, capital and revenue transaction. Payments. Okay, if you are making any payment, you have to verify what benefit will be available for more than 1 year. Okay, more than 1 year, as well as going concern concepts also accepted. Going concern, this concept is predominant. This is fundamental accounting assumption. Another one is any payment gives the benefit for more than 1 year. Yes sir, then it is an asset. No sir, benefit is within 1 year, you can enjoyable within 1 year. No, then it is expenses. Very simple. Very simple. Capital expenditure are spent. This is nothing but asset. Like to acquire, construct an asset. Example, purchasing the building or patent license fee. Because of this reason, you get the benefit for more than one accounting year, or it will increase the productivity or earning capacity. All the 4 points I put in simple sense here. The payment gives you benefit for more than 1 year is an asset, else it is an expenses. Examples. Expenses incurred before the asset is put to use. Any expenses you incurred before the asset getting ready for the usage. In taxation, you will study this as put to use concept. Okay, even inter level also the same concept is there at taxation level. Okay, you purchased various components, started assembling it in the factory. The assembling period may be 7 to 8 months. During 7 and 8 months, this construction is under process. By the time you borrow some money, for that also you are paying the interest. The interest, construction cost, the components you purchased, all these things will be the cost for the assets. Up to what? Up to the date it is ready for usage. The moment it is ready for usage, then all the cost you spend up to the ready to use no will be capitalized. That's what about the assets value. And sometimes rather than buying the new one, you purchase the old machine. Old machine cannot be used as such, so you will do slight overhauling, some repairs, major repairs at the very first time, so that it is now suitable for your company. So any old machine you purchase, and to make it suitable for you, you do some major repairs. Newly purchased second-hand machine, it's not regular repair. Newly purchased machine along with some extra expenses you've done. So this will also be considered as capital expenditure, purchase of new machines. One is construction, another one is purchase and repair, another one is purchase scenario. These three scenarios, all the things will be considered as your capital expenditure asset. In these three cases, accounting treatment is nothing but you have to debit to the asset account. You have to debit to the asset account. This will be debited to the asset account. Here, debited to the expenses account. Clear? Next, in case of revenue expenditure. To maintain the productivity or earning capacity of the business. So I have the machine. Okay, the machine is not working properly. To make the machine work properly, I have to do now and then some repairs, regular maintenance. And I have to use the oil and fuel properly. If I am spending regularly for maintaining or some fuel and other things, that will be considered as your revenue expenditure. Unless you spend, the machine's performance will go down. It's what about the expenses spent for the maintenance, like regular maintenance of an asset, or carry out operating activity in normal course of business, like payment of purchase, payment for purchases, rent, salary, etc. All these things are revenue expenditure. Example, expenses incurred after the asset put to use, up to the date of put to use will be capitalized, and after the date of put to use, that will be called as expenses debited to the P&L account. And any repair and replacement you do on the own out part of the machine got repaired and some components are changed. Because of changing the component, there is no any extra benefit you will be enjoying in the future, then it's called revenue expenditure. Even repairs of an existing machine, all these things are called revenue expenditure. So 3 items. So these things are debited to the concerned expenses and transferable to either trading and P&L account. Is that clear? If the expenses are related to the machines in workshop, the repair expenses will be debited to the manufacturing account. Okay. Otherwise, it may be transferable to the trading and P&L account of the owner. Right. Hope now you'll be able to understand this part. Capital expenditure and revenue expenditure. Now let's go for the some comparison between these two, distinguishing between capital and revenue. Now, nature of business. Capital asset. Example, furniture is an asset for stationery business. The same furniture is goods for furniture business. So for furniture business, so for stationery business, furniture is a capital asset. For furniture business, furniture is trading goods. It's a revenue item, it's a capital item. Now, nature of payment and period of benefit. Payment for asset and the benefit is more than 1 year, then capital expenditure. Payment is for expenses, but benefit is less than 1 year, then it's a revenue expenditure. Purpose of payment, regular repair and just to maintain. Okay, this will come here. Sorry, you can change this. Major repair and increase in capacity, then it will come here. Okay, make it change. Okay, regular expenses will be your revenue expenditure. Revenue, okay. Major expenses, if you do, that will be considered as capital expenditure. Clear? And materiality involved. Usually capital expenditure will be high value, and in case of revenue expenditure, low value. Hope now you'll be able to understand capital and revenue expenditure in detail. Clear? Now, simply we'll go for the receipts. In case of receipts, okay, receipts will also be classifiable in two parts. Any receipts, for that you have to answer. Okay, there in payment you get the benefit for more than 1 year. In case of receipts, you have to work for more than 1 year. Okay, means you are committed for more than 1 year. Okay, then it is called capital receipt. You borrowed 1 crore rupees. Okay, now you are committed to pay the interest and repayment of the loan until it is settled. Probably you repay once in, probably after 4 or 5 years later. So you are committed for repaying this and payment of interest for 4 years, right? So the commitment is for more than 1 year, will be called as capital receipts. In case I sell the goods and get the cash, then automatically my commitment is over. My commitment to serve you is over. Okay. So in class Singer Academy, you paid the fees. I completed classes by 6 months. So the fees I collected is over by 6 months itself. Then it's my revenue. So if the receipt being less than 1 year, okay, yes, then capital receipt. No, sir, then it is a revenue receipt. Capital receipt is usually will be transferable to the liability side as additional liability, or it will reduce the value of assets. It reduces the value of asset. Is that okay? So by selling the assets, you will now lose future years benefit. So if you have the building, you can enjoy the occupancy, or you can let it out for the rental purpose for future years. Year on year, you will be getting the rent. Because of the building, you will get the benefit for more than 5 years or 10 years also. But if I sell, your benefit is now reduced today itself, so you will not be getting. In these two cases, this is capital receipts. Else, it's a revenue receipts. Revenue receipts will be transferable to the trading and P&L account, credit side. And in this case, this will be credited in either liabilities or asset account. Is that clear? Refers the receipt which does not arise in normal course of business. For example, loan borrowed, capital raise, subsidy for assets received. All these things are receipts. Like some examples being insurance claim received for machinery damaged by fire. Machinery is the capital asset. On damage of that, if you get any money, also capital receipts. It's nothing but amount received because of the reduction of the asset. And premium received on issue of shares, liability increases. Liability increases. These two are called as accounting capital receipts. Accounting treatment, it should be credited to the respective account. Either it may be credited to the asset account or credited to the securities premium account. In case of revenue receipts, refers to the receipt which arises in normal course of business. Here, not in normal course of business. Here, normal course of business. Example, sales, rent for let out, interest from investment and all. All these things are usually credited to the trading or P&L account. Example, sale of land and building. Sale of land and building by whom? By real estate dealer. For us, I am not being the real estate dealer. If I sell my property, it's a capital asset, right? So if I am not being the real estate dealer, then it will be asset. Otherwise, it will be considered as my stock. Okay. Rising loan by a person engaged in the business of financing and banking. Loan is actually capital nature, but I'm involving in the lending and borrowing business only. Then it's my regular income. And sale of shares and debenture by a dealer in securities. I'm involving the buying and selling of the shares itself. So all these things are my regular business activity. So it will be considered as revenue nature, revenue receipts. Hope now you'll be able to understand. Clear? Now, a summary. Capital receipts increases either capital and liabilities or reduces the assets, subsidy, insurance claim for assets. Any subsidy or insurance claim if you are receiving for the assets, all these things are capital receipts. Either capital receipt increases the capital and liability, reduces the assets. On reduction of the assets, you will get either cash or subsidy or insurance claim. All these things falls under this case. Otherwise, it's a revenue receipt. Receipts in normal business transaction, receipts from investments and all. Capital payments reduces the capital and liabilities, increases the assets. All the cost you spend up to put to use will be the capital payments. And because of purchasing the asset or repairing, asset efficiency will be increasing. In case of second-hand asset, first time repair will be also considered as capital payment. Otherwise, payment for normal business transaction, regular maintenance of the assets, post put to use, and any investment you do on that you get dividend and interest. Okay, will also be considered as revenue receipts, revenue payments. Is that okay? Okay, payment for capital and liabilities means uh, you borrowed this money, for that you are paying interest, you issued the shares, and for that you have to offer the dividend. These things are revenue payments. Clear? Yes. Okay, now I have referred more than 20 years of question papers, and I summarized the questions from this topic and drafted here. Almost 11 items are there in capital and revenue expenditure related. 6 items are there for the capital and revenue receipts. Once these things are over, this topic is completely over. Capital and revenue receipt topic is completely over. Okay, come on, tell me. Tell me. Classify the expenditure into capital and revenue. Repair of a second-hand machinery before put to use. Come on, what about this one? Capital payment. Reason? First time. Because of this one, we increase the efficiency and benefit will also be enjoyed. Commercial production has not begun till the last date. What happens? Capital. Because up to put to use, not begin. Up to put to use any interest payable, that is also part of what? Capital asset only. Capital payment only. Is that okay? Once the machine is ready, thereafter, if you are paying interest, can be debited to the P&L. Okay, put to use. Interest on term loan for the purchase of machinery, the commercial production has already begun. Then revenue. Repairs of machinery after the machine are put to use. Any repair you spend after the put to use, what's that? Revenue. Amount spent for replacement of worn out part of the machine. Already machine is there. One of the parts has been lost. Now we are replacing that. Come on, what's the nature of expenses? Revenue. Because of replacing one of the part, there is no any increase in the productivity. It remains the same. In car, the tire worn out, so I replace the tire. Because of replacing the car's tire, the car's performance is not improving. The original performance is retained. Okay, then it's a revenue nature. Revenue nature. Next, annual maintenance fee for machine. You can take the AMC. In case of AMC, revenue. Money spent to reduce working expenses. Come on, tell me. What about this one? Revenue or capital? Money spent to reduce working expenses. Capital. What is this working expense for Singer Academy? Rental expenses. How can I reduce the rental expenses? By own premises. If I have my own premises, I no need to pay the rental. So in P&L account, rent expenses will be zero. Because of buying the new building, rental expenses become zero, no? So then the buying of a building is nothing but capital payment. Capital payment. Amount spent for replacement of petrol driven engine by CNG kits with LPG. What's that? Before CNG, petrol driven vehicle may be costlier per kilometer driven. By using the CNG kit, cost per kilometer driven will be cheaper. So you have long term benefit. Then this cost will be considered as capital, right? Cost of rings and pistons of an engine change to get fuel efficiency. Come on, tell for more than 1 year, then it's a capital expenditure. Capital expenditure. Then what about the next one? Overhauling expenses for the engine of a motor car to get fuel efficiency. Capital. Legal expenses to acquire building. Building is related to your asset. Any expenses first time you incur for the purchase of that asset will be capital in nature. Hope these kinds of questions you may be expected in your exams. Now, we'll move on to the next one. Classify this now into capital and revenue receipts. Capital and revenue receipts. Insurance claim for machinery damage. Why do you get the claim? For machinery. Machinery is an asset. Amount recovered because of any asset, then it is capital receipts. Subsidy receipt from the government for what? Plot of land. Plot of land is what? Asset. Amount received for any asset will be capital. General subsidy receipt. General subsidy. Not specific to any assets. Maybe some general revenue purpose also. So revenue. Bad debt recovered. Revenue. Usually you credit that in the P&L account, right? So you can remember what will you do while posting in trading and P&L account balance sheet. Will it be posted in the trading and P&L account or balance sheet? If it is posted in trading and P&L account, usually it's a revenue item. Adjusted in that balance sheet, then it's a capital item. That's how you can remember. Scrap value of the machine. Capital. Okay, scrap value is subtracted from the assets value in the balance sheet. Premium received on issue of shares. capital. Is that clear? Hope two chapters are most important where you can score decent 4 to 8 marks. One is the concept, another one is capital and revenue transaction. The understanding of correct classification of capital and revenue transaction most important even at final level. Even at final level. Clear? So I have to cover two more content. With that, all the theoretical aspects are going to be over. Clear? Contingent assets, contingent liabilities, and provisions, as well as accounting policies. Let's try to finish up all the three now. Okay. Contingent asset. Currently, it is not an asset. Because of happening some event later, this becomes an asset. Then it is called asset. Okay. Similarly, contingent liability, it is not your liability. Because of happening some event, this becomes liability. Okay. So you sell the goods to customers. A sells the goods to B, value rupees 1000. Stating that anything happens worst, if the product is not working properly within 2 years, you can come to me at any time. I will just rectify this. Means warranty. So A has given the warranty for the product. Warranty for the product. Now what is the revenue for A? It is not 1000. He has to make a provision for what? Warranty. So he has to make a small note here. There is liability for warranty based on the estimation probably around 200 rupees. Such a way he may get the information, and he has to be double cautious for that one also. He has to create a provisions for that. He has to create a provision for that. Suppose A sells the goods to B and B says the product is not fit and it spoiled his other product. So B comes to us for a compensation. A says, I will not pay. I sold the product, that's all. Hereafter I am not responsible. Usage is you are responsible. Now you have to manage yourself. Immediately B sued on him on the court. Okay. Now what happens now? If A failed in the case, he has to pay 1 lakh to B. If he win in the case, he has to pay nothing. So this case, no. In case of failure, he has to pay 1 lakh. In case he wins in the case, he will pay nothing. Then this 1 lakh is called contingent liability. This is not liability today, but if he fails, then it becomes liability. Now, for B, if A fails, means B wins. He will get 1 lakh. If A wins, B fails, means he gets nothing. Is that okay? So, because of happening something, B will get something later. If winning happens, if winning doesn't happen, he gets nothing. Then for him, this will be called as contingent asset. Hope you will be now able to understand. But if you are able to estimate, guarantee you may spend around 100 rupees or 200 rupees for the warranty. Definitely there will be problem. Then make the provision. Make the provision. There may be chance of estimation. It's called provision. These are the three aspects. Let's see. Contingent liability is an obligation. Yes, obligation of 1 lakh, which may or may not arise depending upon happening or not happening of future uncertain event. Happening means winning or losing. Okay, winning or losing in the case. May win or may lose. How can I recognize this, sir? Contingent liability is required to be disclosed by way of note to balance sheet. In your balance sheet, below the balance sheet, you will show this as contingent liability for this case 1 lakh. Bill discounted is also a good example. Bill endorsed also good example for contingent liability. I explained this along with the bill of exchange chapter. Go and refer that again. In case of bill discounted or bill endorsed, until it is honored, that will be considered as a contingent liability. The moment it is honored by the payer, then it becomes no liability or liability, right? So contingent liability will appear below the balance sheet. Below the balance sheet. Two examples are there: bill discounted and bill endorsed also. In this case, claim pending for payable. In case we fail in the case, we have to pay. So example being bill discounted but not matured, arrears of dividend on cumulative preference shares. These are the example for this. Contingent assets usually arises from unplanned, unexpected events that gives rise to the possibility of inflow of economic. This is a reverse case. You will get the cash. A claim filed against third party. B filed the case on A. If B wins, he will get 1 lakh. Otherwise, he will not win. This is called contingent asset. Is that clear? Contingent asset and contingent liability. Provision is a present liability of uncertain amount. I am not sure how much, but there is definitely a payment. So, amount is uncertain, but definitely I have to pay. Can be measured reliably using substantial degree, like provision for depreciation, provision for taxation. These are the examples for the provisions. Clear? So, here if you are able to estimate this value, then it is provision. If you are not able to estimate and you are not able to guess whether you will definitely win or lose, then that will come under contingent liability. You are able to guess that definitely there will be outflow and you can roughly estimate the value, then it comes under provision. Is that clear? So, uncertain amount and measurable reliability. In earlier case, it's not measurable. Okay, contingent asset, we'll get inflow of cash. Do I want to recognize? No, sir. Do I want to disclose? No, sir. In case of contingent asset, we will not bother about showing, recognizing in our book. In case of contingent liability, possible and probable. Possible and probable means we fail in the case. The probability of that may be more than 50%. Definitely we will fail. And in case of failure, we have to pay. If the probability is higher, outflow involves, and of course, no need to recognize, you have to disclose. You have to at least disclose. But because I'm not aware about the exact amount here. In case of provision, you can measure, so recognize. Recognize means in your balance sheet, you have to show as provision for doubtful debts, provision for depreciation, provision for taxation. Measured and shown in the balance sheet. And contingent liabilities status is very remote. Sir, there is no chance to fail, sir. Unwantedly, that fellow sued on us. Definitely, our case will be in our favor only. He said, should? Yes, sir. As per the legal counsel, we got that message. Then, no need to consider about recognition, no need to disclose. 3 stated. At least state that there is a chance of loss. In case of contingent asset, never mind. Never mind. And in case of contingent liabilities, there is a possibilities. Then at least give a disclosure. Sir, very remote possibility, sir. Don't care about that. In case of provision, you are able to estimate, then make a provisions in your books of accounts. Clear? Provision is made. It's a proper present obligation. Definitely there is an outflow and you can estimate the outflow also. These 3 conditions satisfied, then it becomes provision. It becomes provisions. Is that clear? Now let's move on to the last component, accounting policies. Okay. So accounting policies, nothing but accounting principles. Already we discussed a small item earlier. Okay, it's a principle and method of applying those principles adapted by the enterprises in preparation of final accounts. Okay, WDV, SLM. These are the methods we have for depreciation. Is that okay? Then these are principles. Okay, methods, policies. These are called policies. And what do you want to select, sir? I go for WD method because it seems to be more faithfully representing the balance sheet. So I might choose this one. I may choose this one. Is that okay? Between these two, how you choose, how you reject this, sir? What's the logic behind? For choosing WDV method and rejecting SLM method, there should be some logic, no? You say that, sir, WDV method is superior than SLM method. Right. If you say that WDV is superior than SLM method, give the reason. 3 considerations are there primarily. One is prudence, another one is substance over form, another one is materiality. These are the 3 primary considerations. Right. Now, I'll see all the 3 considerations later. Where we have multiple policies, like in case of depreciation. We have n number of methods of depreciation, and in case of inventory valuation, FIFO method, LIFO method. So these 2, for your better understanding, I can give the example. Not only that, we have been given other models also you will learn all these things at your final level or intel level, right? Treatment of contingent liabilities. There are n number of methods. What method you can choose? Those things also we have, and detailed principles and policies to be followed, and valuation of investments and fixed assets and all. But anyhow, for your better understanding, method of depreciation is okay. But if in your examination where we have 2 or 3 policies for our accounts, then you can list down at least this one. So depreciation, valuation of inventory, valuation of assets, valuation of investment, valuation of intangible assets, like a few numbers you can keep here. Where we have multiple models, principle suggested you which model is superior. For that, what you have to do? You have to follow these 3 steps: prudence, substance over form, and materiality. Prudence means real one. Faithful representation is called prudence. Already we have studied along with the concepts, right? Okay, in case of possible losses, make a provision. In case of possible gain, don't bother about that. On realization, only you have to show. That's called prudence. We already studied here. Okay, that's very, very important. So while choosing, this particular concept should be fulfilled. Verify whether this concept is fulfilled or not. And next one is all about materiality. Already we have studied whether it is a matter or not. Small petty information. So leave it then. If that information is given, then it will have some impact in the decision maker's mind. Then it should be shown properly. Such a way you have to choose the accounting policies. Now, substance over form. Already I explained, right? A and B. A gives 1C and B transfers his house property to A. This is transaction number 1. And registration happened later on. Right. Now, this happened on 25th March 25. This happened on 5th April 25. So, now I have to prepare balance sheet as on 31st March 25. Okay. Now, in the books of A, in the books of B. Come on, tell me. Originally, this asset is for whose asset? B's asset. Now tell me, as on 31st March 25, whose asset is this house property? You know that as per the legal requirement, you have to register. You have to register. On registration only, it is confirmed being transfer happened. By this time, still legal provision is pending. Here, legal is also over. But I want to show and prepare my financial reports on 31st March 25. Now tell me, as on 31st March 25, whose asset is this? Whose asset is this? This will be considered as asset of A, 1C. Okay, house property 1C. In case of B, 1C minus sale happened. So now the asset being 0. Because this is what about the reality. Reality is nothing but substance. And this is nothing but legal formalities are formed. Okay, if the legal formality is only pending, reality is already over, give the importance for the reality, not for the legal form. That is what about the substance. Reality is superior than legal formality. Substance over form. So will you show this as in your asset or not will be confined or confirmed based on the substance over form. Substance is the primary consideration for recording in your books rather than formalities. So legal formalities is just additional information. So not required to be used for recording purpose. And sir, I followed WDV method or SLM method for past 5 years, sir. Okay. In the current year, I want to shift from SLM to WDV method. Can I do so, sir? You know that as per consistency method, if you follow SLM method, you have to follow SLM method year after year. Rather than SLM, if you follow WDV method, you have to follow the WDV method year on year. But what happened now, in the last 5 years, you follow the SLM method. So in this current year, you want to shift from SLM to WDV. Can I do so? Any method you followed, you want to plan to shift from one model to the other model. Can we do so? Already we studied that in depreciation chapter. I guided you some illustrations also in depreciation chapter. Few years it was under WDV method, suddenly they want to change the SLM method and vice versa case. Those shifting of the method is also possible. Shifting of the method is possible due to two reasons. One is because of shifting, the books of accounts gives good presentation, better presentation because of the reason. So SLM seems to be logically not good, sir, for the identification of correct profit. Rather than if I follow WD method, I can get exact profit, sir. Can I shift myself? Okay. State this and shift and inform in a notes to accounts form that you have shifted from SLM method to WD method. SLM method to WD method. Is that clear? And sometimes it may be required by law, legal requirement or accounting standard suggested that hereafter you have to follow WD method. Because of the legal requirement, you can shift from SLM to WDV. Because of these two reasons only, you can shift from one method to the other method. So change in accounting policy is possible. One is due to the comply with the law and comply with the accounting standards. Apart from that, to ensure more appropriate presentation also be possible. So these two are being law and accounting standard. This one being the better presentation. Hope now you'll be able to understand the accounting policies and choosing the accounting policies and changing the accounting policies. So accounting policies where we have multiple alternatives. Okay. And in those alternatives, choosing also be there. Once you have chosen, can you shift from one to the other? All the things are possible here. So all the chapters I have covered here, theoretical framework, two chapters are more important. One is concepts, another one is capital and revenue transaction. The capital and revenue transaction very simple, just to 4 points. Once you understand the 4 points, you can solve any number of illustration. And concepts 13 points were there. Apart from that, the difference between bookkeeping and accounting may be asked now and then. Contingent assets, contingent liabilities, and provisions at foundation level, a small idea is more than enough. Is that clear? So with that, all the theoretical framework is also over. Clear?